Hello and welcome to Lonsec's market update for May. Firstly, we'll go through latest developments and then we'll have a look at the outlook for the market. Well, in recent developments, we've seen the US dollar continue to weaken as the Japanese central bank unexpectedly did nothing at the last meeting, which led to yen strength and the US dollar falling. Bond yields have generally been falling globally since the Federal Reserve halted its rate hike trajectory and delayed rate hikes for this year. There's been tentative signs of recovery in China, with the PMI starting to just push above 50, which means expansion for the manufacturing sector. And we've seen commodities continue to rally over the last couple of months, and in particular gold has moved higher along with iron ore and oil. The big surprises have been in Australia in the last month or so, where we've seen the Reserve Bank surprisingly cut the interest rate by 25 basis points to 1.75, the first rate cut in a year. And it seems that it was concerned about the low inflation print earlier in the month, where inflation came in around 1.3, 1.4%, well below the RBA's target range of 2 to 3%. In addition, the Aussie dollar had been rallying in the last 2 or 3 months on the stronger commodity prices, and I believe it was probably starting to get worried about the strength in the Aussie dollar. So with the sort of Cold War currency war going on in the background, where central banks are trying to get their own currencies down, it does seem the Reserve Banks entered the fray and looking to get the Aussie dollar down. And that has certainly worked, with the Aussie dollar falling about 2 cents in the last 1 or 2 weeks, down to around 74 at the moment, after previously being around the 76 level. So the Reserve Bank usually never cuts rates in one cut at a time. It usually follows through in 2 or 3 cuts at a time. So the market now expects another rate cut in another couple of months, with the cash rate looking to come down to 1.5%. Then in turn, this has dropped the whole yield curve in Australia, so all interest rates are now dropping, and we are seeing very low rates with the bond yields, in particular the 10-year bond yield, down to around 2.3% now. So the whole yield curve is coming down. The other event this month in May was the May budget, of course, with the May budget being really quite neutral, remaining at around $37 billion deficit. With the impact being some tax cuts for middle income earners and tax cuts and incentives for small business. On the opposite sides of the ledger, there was some raising of taxes on tobacco. There was some restrictions on superannuation and some caps put on them. Plus also there was some increased taxes on multinationals. But overall, a fairly benign budget, where net debt should peak at around $356 billion, which is about less than 20% of GDP. Australia should retain its AAA credit rating as a result of the budget. The government is relying on a fairly rosy outlook from here, around 3% growth up to 2020 and 2.5% inflation up to that point, remembering that inflation is only about 1.3, 1.4% at the moment. But relying on those rosy forecasts to get the budget deficit back to surplus in the next 5 years. Overall, we've also seen the bank reporting season. We've seen a bit of a mixed results. Westpac sort of coming under, I guess, high expectations, and ANZ and NAB coming over low expectations. But overall, we're seeing falling earnings per share after the extra capital that's been raised during the year. And we haven't really changed our view that CBA and Westpac continue to be the better banks, with NAB and ANZ the worst performing, and in that order. And we'd expect the banks to continue to range trade moving forward based on the results that we're seeing at the moment. So turning to the outlook, we see that the US economy still remains quite robust. We've seen the recent fall in the US dollar. Interest rates moved lower in the US also. So you'd expect that manufacturing would pick up during the year, and that this would be supportive of the economy and generally the share market. So the outlook looks pretty solid still for the US economy as it runs into the election later in the year. In Australia, we've seen the lower Aussie dollar also, which is a bit unusual, where we're seeing US dollar falling and the Aussie dollar falling at the same time. But obviously that's come about because of this surprise rate cut by the Reserve Bank. So we have lower Aussie dollar also, and we have lower interest rates. So again, that's quite supportive of the economy, quite supportive of property and stocks. So overall, the outlook there for US and Australia continues to improve at the moment. A key X factor for Australia is will commodities continue to recover, and will China continue this tentative recovery that's happening at the moment. The other big thing is the July election is coming up now for Australia on July 2nd. The Labor and Liberals are neck and neck at the moment in the polls, but Malcolm Turnbull holds a clear lead as preferred Prime Minister. And I would think that with the recent rate cuts coming through right before an election, that the odds are starting to tip towards a Liberal National Party win. So that's the next one of the next big events coming up in the next couple of months. If we turn to the rest of the world, a lot more cautious and uncertain outlook for Japan. It is struggling to get growth and inflation at the moment. Europe also is stuck in a low growth deflationary period with Brexit type issues, political issues surrounding it at the moment. Plus China, there is uncertainty about whether this tentative recovery can sustain itself during the year. So there's a lot of uncertainty there at the moment. So to wrap up, we're basically positive on the US and Australia, but remaining cautious on the rest of the world, being Japan, Asia and Europe. That's it for Lonsec's market update for May. We'll be back in June to see how things pan out.